Hey, good morning, everybody. Marty Missoura, 2nd of March, 2019. Been a few days since we've looked at the chart we've been keeping track of the last several weeks. So I thought I'd do that for you this morning. Beginning to paint a little different picture, not quite as constructive as it's been leading up to the recent kind of sideways action at 2800, which I warned you could happen. But some of the internals aren't quite as optimistic as they've been. Not bad. I'm still personally still constructive on the prospects for getting through the 2800. I think there are some external factors that need to come into play. I'll probably talk a little bit about that as well. But just to update you on the chart, remember we started it up here. I said look for resistance at 2600. Pretty much did everything that the market should have done at various levels, meaning where there was resistance and consolidation was necessary, it happened at 2700, resisted the 200-day moving average a bit, found a zone in there, broke through it, tested it a little bit, and then 2800, which a lot of technicians I think were looking for strong resistance, and sure enough we've been getting it pretty much all week last week. We did close above 2800 on Friday, so that was a bullish move, and it happened right at the close. But we did have two previous closes here, and then those ultimately failed. Never even got to a close above 2800 here. So we'll see. I kind of like how we came into this, tested it, and then didn't fall right back off like we did in these two instances and in this third one. And then have closed above it on Friday. Saw a lot of noise around that being very positive from a technical perspective. 50-day moving average sloping up is good. The 200-day moving average beginning to slope higher is very good from a long-term trend perspective as well. Unbalanced volume, though, would be a red flag. As you can see here, we have a sideways move, but we have a big dip, meaning the sellers came in with some conviction in here. So remember, I was kind of touting this as something very constructive as we moved higher, that the bulls had more conviction. Here, clearly, the bears were looking for opportunities to sell. The news that was real bullish on Friday was that a 150-page document is being prepared for the president and the Chinese president Xi to review and to ultimately agree to in a later March signing ceremony or meeting here in the U.S. at one of the president's properties. I think the political importance of that is enormous, and I absolutely am committed to the notion that the economic importance of that is enormous as well. In fact, I believe it is absolutely critical for the market and for the economy. I don't believe that the economic setup can continue to paint a bullish picture amid ongoing trade disputes. Now we've got China, I think, finishing up, and then we're going to segue from there to Europe. That one needs to be put to bed rather quickly. I just completed my weekly general conditions analysis, or I should say the scoring of our PWA macro index. It remains right at 31.4 to be exact, and that's okay. A year ago, it was at 81. So clearly there's been a deterioration in global conditions, and much of what we do in this index is US based. So while there's definitely good news, there's also some concerning below the surface developments that I think we should be paying attention to. My analysis is that it is largely due to waning sentiment over uncertainty around global trade. So we get those things fixed, and I think we see animal spirits come back, I think we see our index improve, and I think we see better things for the market. The longer we sit with trade uncertainty, I think the more conditions deteriorate. And you clients out there, as I continue to preach in the review meetings, once that train leaves the station and we are faced with recessionary momentum, then the ending of a trade war doesn't fix anything. Then we have to ride through recessionary conditions and ultimately a bear market in stocks. And we will have to do a good job on our end mitigating as much of that risk in that downturn as possible within portfolios. We are not there yet. We are still in an expansion. We are still in a bull market, and therefore we are still growthy with our allocations, but we have to be flexible, open-minded, and ready to make adjustments as necessary. Hope you all have a wonderful weekend, and I'll talk to you again very soon. Take care. Bye-bye.